Welcome back. Markets holding at around the 25,500 odd mark. But let's turn our attention from the equity markets to the commodity markets. Crude prices have been on a tear following the tensions in the Middle East. Manisha joins us to fill us in with a quick analysis on that. Manisha.
Well, thank you for that. Yes, the crude oil prices are trading higher for the third straight day today. And we did see a 5% of an immediate knee-jerk reaction after we did hear about those Iran ballistic missiles over Israel there. Still holding around that 75 mark right now. Well, it is about Middle East now as the escalation and violence really spreads further east. Let me remind you that 1/3 of global crude oil production comes in from Middle East. And this is the area that the markets are keeping a keen eye on. Having said that, the reason that you still are way off this year's high, which was $92, we are just about holding 75 right now. We've come off the low of 68 to 69. The reason the crude oil prices haven't run up further from here is because the global markets are looking at a huge supply surplus at this point in time. OPEC plus spare capacities stand at around 5.7 million barrels per day. This is much higher than what Iran does in sense of production at around 3.4 million barrels. Also, we are looking at a weak bearish quarter behind. Crude prices in the month of September declined by nearly 9%, 17% of a decline in the previous quarter as well. If you look at the US crude production, that has been increasing as well. Currently stands at 13.4 million barrels and could end the year at 13.5 million barrels. That is also putting pressure on prices. The US gasoline demand has been the lowest in 6 months. And apart from that, EIA says that the US production is not the only thing that is increasing. The US inventories have been increasing as well. The latest count has been 3.9 million barrels there. The OPEC output cut, which as of now stands at 5.9 million barrels, they could start to see that also ease gradually going forward. 180,000 barrels per day is what you could see start coming back into the markets from the month of December as well. The Wells Fargo report should come in on your screens because that says that the global production as of now is at 102.6 million barrels, which is expected to increase to 104.8 million in the next year. So you are looking at higher supplies, higher production, higher inventories, and the demand clearly not matching up is the reason most of the banks and brokerages are looking at lower prices for crude going forward in 2025. Highest really comes in from Goldman Sachs at 77. Rest everybody else is talking about 75 for the next year as well as an average, whether it's UBS, Bank of America, JP Morgan. The least bullish clearly is Citi, which is talking about $60 a barrel of a probability as well going forward. So unless there is an impact of war on oil facilities and oil supplies, you perhaps are looking at crude oil prices not clearing above 80-85 in a hurry.
All right, not going above 80-85 in a hurry. That should be good. With that, thank you so much for that update, Manisha.